an incredibly important lesson for you, which I think will serve you very well in your life as a trader, is to do with when you're looking at divergence and what's happening with price and what the implications would have been had price moved just a little bit further than it actually ended up doing. I have an example of a chart in the background, and I appreciate that it's messy, right? But long-term watchers of the channel, they'll be okay with it. It's filmed during a live show, and people in there, they're all good with it. But somebody who's just tuned in here for the first time will find it a little bit of a mess. I understand, right? Do come back to look at more stuff on the channel. Let's just see if I can help kind of break this down a little bit. There's only really one major thing that I wanted to show you, and it's to do with this high and this area where there was consolidation. And you'll notice before there was a yellow dotted line running along between these two peaks, not up to this high, but between this high and then this lower high just here. I'll pop the drawings back on, and the question that's written in here is about whether we would have had bearish divergence had we not chosen to consolidate instead. Now what happened is I actually drew this on the charts back when it looked like this here anyway, and we were asking the question right here, you know, what would have happened at this close had we pushed a bit higher? What if we'd come higher? What would have happened to this? Now I'll just remove that. What would have happened had we been up just here equal high or just a little bit higher? Let's just imagine that prices had moved instead of up as high as 523 that day. Let's imagine they'd gone up as high as 550, 556, 560s. Then where, because the high on the day as it happened was 540, you know, it got within 20 cents of actually doing this, you know, and a decent amount of movement here. What would have happened, and we can see in the RSI this light gray, maybe you can't see it at home, I don't know, I'll make the RSI full screen. You can see this light gray serrated line. Let me just make it a bit whiter. So you can see this dotted line run along here. What would have happened? Well, you can see this is lower than we were previously. Actually, by the looks of things, you know, we're talking about it just here at this anchor point as opposed to just here. So I got, you know, maybe I was off by one period, but we were actually looking at the day before, whatever. And we're saying, what does this mean? You know, what does it mean? And we want to see consolidate instead, right? See if we could consolidate instead, and that. So the and we were able to consolidate, which has now given us the ability to come back up towards the top side without having to fear so much with regards to the thing. So I'm going to remove the looking back in time button. Here's the charts as they actually stand right now, and we're able to come back up towards the top here with the same setup again, you know, with the same setup again, except now we actually are bearishly divergent. Now we actually are bearishly divergent if we were to pull back. So now we're actually up here and able to say to ourselves, if we were to pull back, then we would have an issue, which means that we're able to then manage risk as traders by saying, if we were to take out this low in the RSI, that would be a failure swing. We know that by the way that the RSI works, that this would likely happen before we actually took out these areas on the chart. So we'd have a really good idea as well by combining this with the understanding of the fake out territory as to where things could go if they were to start to look negative. We understand that that's where they could go based on this. Also, because we've done this movement down the way, then we've managed to give ourselves in this section of time another good chunk of breathing room where we've got ability to move even higher on this now as a result of this consolidation. With continued momentum through this zone, we would then be taking out the bearish divergence question of this previous high, moving up to try and challenge this other one into the actual really kind of extended zone there on the RSI. And that's when you're looking, and where does this all line up with as it happens? And this is when it comes back to looking at the TA again, and this is actually for the people watching right now for the UAC, Uranium Energy Corp here. You're looking at saying, well, if we actually take out 577 here, we're taking out the previous high. This is moving up into the Fibonacci extension zone, and we'd be looking for one of these next targets, and it would be 650, 740, and 832 are the three subsequent upward side targets, following along from a breakout here where it doesn't get bearish divergence and collapse. And if it does, we know the areas to look down past. You know, you'd have to figure them out on your own charts because I just drew them on, but you get the point. And then we know where we're looking up to, right? This is how this all works, and this is as a result of having given us the time here in this little phase of consolidation to burn away some of that negative implication, because with any further follow through here, then this would have been way more negative on the way back down. Instead, it was able to remain positive due to the fact that we hadn't quite at that stage put in a higher high yet. Now we've done the higher high, or we're doing the higher high. Should we see closes up where we are today? So we want to see this get follow through, and we have our next targets, and these are really likely targets to move to. And of course, there is the shape of this overall thing as well in this region here. And if we were to be breaking outside of that as a phase of consolidation, you're looking up towards a measured move, carrying you up as high as these targets up above, and that's like above $7 from a stock that's $5.74 at the moment, so on and so forth. The opportunity to do so having been bought by not having been just that little bit too much exuberant back here. Again, this is the importance of understanding the dynamics of bearish divergence and then looking at the failures of patterns and so on. One last note as well, of course, this is the setup for a failure swing towards the downside. Excellent. Check out the failure swing video if you don't know what they are. Look for the video with the thumbnail that says how to catch these tops, or how to, it's a video about failure swings in my education playlist. You'll see it. It's really good.